Hello, folks, and we have your daily dose of crypto news X2 this weekend. So, Solana, for some reason, has been selling for $324 over at Grayscale. Now, I don't really know why a share of Solana at Grayscale was selling for $324 because that's like over a 700% premium. My guess is they do have to buy enough Solana to basically match the Grayscale funds thing, and they kind of ran short on supply all of a sudden because people were FOMOing in like crazy. So the demand outstripped the supply, at least for a minute, and there was a massive rise up in price. It did actually last for a little while. I think it's coming back down right now, or has come back down. Those kind of premiums don't generally last long. There might be still a significant premium because remember, the Bitcoin discount lasted for quite a long time. Eventually, obviously, it went away as the market went up. And I still think there's a small discount right now. So there might be some like surplus or some premium right now still over at Grayscale. That means if you bought Solana shares at Grayscale a while ago, you had the chance to sell them to make big profit, or still have the chance to sell them at big profit. Probably doesn't happen too often, but you know, the thing is, like, that's another benefit of buying these coins that Grayscale has funds of during the bull run, because if the bull run gets too severe, there might be a severe supply shock of these coins. And if there's a severe supply shock of these coins, then obviously Grayscale may not be able to buy enough. The supply of these shares might not meet the demand of these shares, and people might bid these prices up. And if you have those shares, you could sell them for the demand price, which could be several times higher, as Solana has shown, than the actual price. Once again, probably doesn't happen all that often, but in a run-up, anything can happen on these funds. And also, these funds, these coins have the extra benefit of maybe able to convert into ETFs soon. Once again, I still believe that Ethereum and Bitcoin will be the only solo fund ETFs for a while. The others, like Solana, will probably get rolled into a large cap fund. But if any of these coins get filed for an ETF, they will pump the coin up because a solo ETF obviously will attract investors. But either way, Solana selling at $324, still a pretty bullish sign for Solana overall. Once again, it could be like an FTX pump, or it could just be like a pump after a post pump after the conference. They did actually show off Fire Dancer. And it's basically an optimization of node thing there. So it could be pumping on that. Usually coins dump after the conference, but it's actually remained pretty strong. Like I said, there could be a lot of VC manipulation in there, and I wouldn't be surprised if there was. But Solana, for all its faults, does have a DeFi ecosystem that's like over $500 million right now. I think it's like rank 8 or something on DeFi Llama. And that does look to be growing. So it may not be a bad investment. I'm still not going to buy it. But overall, it's moving up higher on the list as the DeFi ecosystem grows, as it goes farther and farther away from the crashes that plagued it for early this year and last year. And it looks like it is becoming more stable. But we'll have to see what happens during the bull run to see if it can maintain that stability, because consistency is one of, if not the most important part of a cryptocurrency. So aside from that, JPMorgan has rolled out programmable payments on JPM Coin. Now, I don't think this is such a competition for XRP or XLM because it has to be intra-bank. Now, that doesn't mean it can't do cross-border transfers. It can, because there's a lot of intra-bank transfers cross-border. JPM has branches all over the world, and obviously the suppliers and people that actually use JPM banking services, it can all be contained within JPM. So it will take away part of that market, but in terms of if you want to transfer money from one bank to another across borders, like for personal remittance payments, then that you still have to use a bridge currency for, or at least in the less liquid corridors where you can't directly swap. So multinational banking firm JPMorgan has rolled out a programmable payment feature for institutional users of its private blockchain platform, JPM Coin. So Naveen Mallela, head of JPMorgan's blockchain-led platform Oinks, shared details of the new functionality on LinkedIn. The capability is said to enable real-time programmatic treasury functionality and new digital business models. So what this is, it allows like logic code to be attached to transactions. So it's kind of like hooks for XRP. What it is basically simplified smart contracts for JPM Coin, which I think will actually be a big feature and people will actually use it. It's actually a really, really nice feature to these transactions. It allows things to be executed after the transaction's done. I think it will like enhance stuff like escrow, like prepayments, post payments, and stuff like that. So it's actually a really, really big help to their customers and their suppliers. This is not something new. Obviously, crypto's had smart contracts for a while, but for a private chain, it looks to be the first one. And other chains might eventually adopt this technology because it will actually help their customers. It will actually help their users. So basically, like they're offering it as a first of its kind by the global commercial network. And of course, there is an if this, then that interface. So it's very simple programming logic that anyone can use. They probably just have like a flow sheet that you can follow. You probably do not actually need to know how to program to actually do this. So very easy to learn, very functionally good to use. And I think the customers are really going to like that. And I do think other banks are going to copy this model where if it's intra-bank, they'll just use their own coin or use their own blockchain system. But if it's inter-bank, they might go through like a middleman or something, as long as it's in a corridor where a middleman's actually needed, meaning that corridor probably doesn't have enough liquidity to actually do it without the middleman. So this is basically event-based payouts. Programmability has been a keen objective for digital currencies and tokenized money since the beginning. Siemens AG Group Treasury Peter Rothgeb added. So Siemens is one of the first users, but by the end of the year, they expect Cargill and FedEx to actually be using it as well. So there's a lot of big companies looking to jump on board this new platform. And, this new platform is going to be a lot of functionality. So not exactly competition for coins like XRP and XLM, but definitely something that, kind of upgrades the JPM ecosystem. And obviously they can do like instant payments and instant transactions within the intra-bank network. So pretty cool thing for JPM Coin. Hackers have actually hit the world's largest bank. And it's not an American bank, but it did kind of screw up the treasury bond sales the US government was trying to do over this weekend. So they hit the ICBC, which is the New York arm of the Industrial and Commercial Bank of China. That financial institution is the biggest bank in the world, with a value of $5.74 trillion in total assets for a bank. And of course, what happened is they forced people to settle trades on these USB sticks. And obviously that's not the most efficient thing. It makes ICBC look bad. It also makes the government of China look bad. Obviously, it was a really bad thing for the US government too, because it disrupted the ability of the ICBC to buy US bonds during the sale. They do believe that the ransomware gang Lockbit, which has ties to Russia, is behind the attack. So Russia is hacking Chinese banks as well. That's going to make Comrade Xi Jinping very, very unhappy. I don't think it'll actually splinter the alliance right now between China and Russia, but obviously it's kind of an embarrassment for the bank and kind of an embarrassment for the central government because, we know the central government operates all this stuff. The incident spotlights a danger that bank leaders concede keeps them up at night. The prospect of a cyber attack that could someday cripple a piece of key financial systems wiring, setting off a cascade of disruptions. Of course, if they were decentralized, it wouldn't be as bad. Maybe they'll actually see this point. Doubt it, but maybe they will. And the thing is, it's not like cryptos don't have hacks of their own. We have a hack or something every couple of days. So essentially, I don't think banks are looking at it oh, we want that system right there. Crypto does need to fix a lot of these things before the banking world will actually really trust it. Not just because it takes the banking world's power away, but because there's a lot of problems within crypto itself, obviously. And the amount of hacks and breaches in crypto far outstrip the number of hacks and breaches in the banking system. So we'll have to fix that. But the number of attacks in the banking system is actually growing as well as a percentage. So they are obviously very, very keen on that. They're upping their cybersecurity stuff, but this will actually happen every once in a while. And like I said, this could actually lead to more reasoning for decentralization. I doubt any of these big banks will decentralize themselves on a public blockchain, but it could move them more in that direction where they're at least partially decentralized, where they don't have one gigantic critical point of failure. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.